Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, August 18th, 2009. Well, we're seeing a little bit of a springboard bounce back effect on Wall Street today, folks. As you can see, the Dow is actually positive on the day, about 77 points. The Nasdaq up about 23, and the S&P 500 up about 9 points. Basically 1% or a little under 1% across the board. That's following about a 2.5% drop yesterday. So you are regaining a little bit of what you lost. And really the catalyst today, if you're looking for a fundamental reason why the markets moved up, you first have to look at the Asian markets. Asia let us down yesterday, and then today they actually got a little bit of a bounce overnight, and you've seen the markets kind of get the same type of deal. So a little bit of a bounce in Asia. In addition, you have earnings announcements from the likes of Target, Home Depot, stocks like that are buoying this market to the upside. And I'll show you guys the Home Depot chart here. Home Depot having a solid day, up about 82 cents. By no means a major move to the upside, but at the same time a positive move nonetheless, giving the markets a little bit of a bid. That's part of the Dow, as we all know, S&P, and that sort of thing. So you're giving them a little bit of a bid to the upside. In addition, I think it's important to realize that look at the move yesterday that Home Depot had. Home Depot was down well over $1 yesterday. Very, very sizable drop on Home Depot on the Lowe's earnings. So Lowe's having an impact yesterday on Home Depot. So today, Home Depot really actually just trading back to the even level. And take a look at this. This is where Home Depot was prior to yesterday's drops on the sympathy to the Lowe's drop on the earnings. And sure enough, look at it. Really right back exactly prior to where that was on the charts where it closed the day before yesterday's drop. So as you can see, that's really what's going on right now. Home Depot giving a little bit of a bounce to the market. Target, TGT is the symbol there. Target having a fantastic day, up $3.15 right now. And that's also buoying retailers. So retailers as a whole are getting a little bit of a move up. That's kind of giving the markets a little bit of a flat to positive bounce today. And that's really what you're looking at, folks. You still have to take into account the massive drop yesterday on the markets. And really today, what you're seeing is a little bit of a bounce back effect. You can do a Fibonacci retrace on this market. I mean, there's a lot of different ways to analyze it, but nonetheless, a little bit of a bounce back effect today. Now take a look here at the RTH. I just was mentioning how the retailers were stronger today, and you can see the retailer holdings here. This is the RTH, the ETF for the retailers right here. This is where we closed yesterday on the RTH. And you can see that they're nicely positive, up about 70 cents on that RTH. So that's just giving you a sense of the nice positive moves in some of these sectors. The other sector buoying the trend to the upside is the financials. You can look at the XLF today, look at the XLF from yesterday's close, and this is where we currently are to the upside. So a nice move up on the XLF. Stocks like Goldman Sachs up over $3 today. Stocks like JP Morgan up over $1 today. Those are really leading the financials to the upside. All right, you also have stocks like Bank of America up 40 cents, Citigroup up 10 cents, Morgan Stanley up 30 cents. So across the board, really some nice movements in some of these financials. Now, what would be the weaker area today? First of all, oil is getting a nice bounce today. The USO having a big push. Look at this move on the USO. You're actually hitting good resistance now. For those of you that are scalpers, you could be looking at this as a nice resistance area on the USO. But bottom line is you're not seeing a lot of pressure on the ExxonMobil. Take a look at Exxon. Exxon's actually negative on the day, which is pretty surprising considering oil's up as much as it is. Spot crude is up $2.19, just under $69 a barrel. So a big bounce back effect. Now, I mentioned at the beginning of this video that you had a lot of characteristics on the fundamental side that are being attributed to this bounce. But you guys that are hardcore technicals, guys like me, you know that stuff barely matters. It's really a matter of the dollar. The dollar continues to be a key driver in this market. And I'm going to show you the UUP. Look at this UUP today, guys. Look at the fall in the UUP today. Sure enough, that's giving, remember, oil and commodities are traded in terms of dollars. Therefore, when the dollar falls, they have to increase to average out the drop. All right, they basically negate that because they're going to stay the same cost. It's only the dollars, it takes more dollars because the dollar dropped to buy that same amount. So really what you're seeing is the UUP dropping, therefore oil has to get a bid to the upside, and sure enough, oil is moving up. That's causing a nice bounce on a lot of these commodities out there, a lot of the stocks out there getting a bid as well, as I mentioned. So it's a compilation of a lot of things. You have a few fundamental pushing reasons, Home Depot, Target, and so forth. Then you have some fundamental, some technical levels as well, the dollar pulling back, the dollar causing a bounce in crude oil, and some of these other commodities. That's really what we're seeing right now, folks. Again, by the way, just to reiterate here, Research Center subscribers last night got the pullback motion by going into a neutral stance. Had been bullish on the dollar up until yesterday, had gone back to a neutral stance, expecting a little bit of a pullback here on the dollar. Same thing with oil, going into a little bit of a neutral stance, expecting the bounce on oil and on gold, and that's exactly what we got. So another nailed call, 3 nailed calls there again, and again, 90 to close to 100% of late on the calls as we just continue to knock them out of the park. That's really our average. Anywhere between 80 and 90% general on every call will be correct based on the Research Center guidance in the videos. Okay, coming back to a couple things. I want to go back to the spiders and show you a little bit about what's going on. The trend lines are really major here. We had some trend lines here. Look at this trend line up earlier today. This was the high from yesterday. Look at that perfect hit, scalp opportunity there for a pullback consolidation off this up move. Sure enough, consolidation yields to another up move. We hit that line again, then finally break through. And where do we go? Upwards of this blue line. Look at this blue line here, folks. I'm going to show you where this comes from. Take the high pivot from the 14th, connected to the low pivot or the secondary high pivot from the 14th, and all of a sudden, you have yourself a nice trend line. Look at that, they got tagged. That's a beautiful trend line right there, and that's giving you the high pivot on this market so far. In addition, if you want to look at the low side, this level, see this line right here? You see the one hit, and one hit right here? And then sure enough, the lows of the day, right into that 98.40 level on the SPY. If you got below that, you look for a double bottom right around 98.15 to 98.10 on the charts, and then a break of the even number at 98. But right now, that's what we are seeing, folks, very clearly in the markets. These technical trend lines are working unbelievably well to tell us where each thing can go, each move in the markets. And sure enough, you went up right to this trend line, pulled back. We went up right underneath the secondary trend line at 99.40 to 99.50, pulled back, consolidated, tried to break out again, hit this blue trend line, and since then we've started to pull back. So that will continue to be resistance. If you take out this blue trend line to the upside, you're going to look for 99.40 to 99.50 as resistance. If you take that out, you're looking at 99.75, and a break of that would yield the 200 moving average, currently sitting right now at approximately 100 even number. Those are your upside resistance levels in this market. Downside resistance, 20 moving average is minor, but is there. That's at 99 even number right now. Below that, 98, 90 or so right here at this level. 98, yeah, right in this level, just underneath 99. And then after that, the 50 moving average at 98.75, and below that, 98.40. Those are your levels, folks, that you're watching for to be on the upside and downside of this market. Now, what do we think is going to happen the rest of the day? Well, as we talked about in the Research Center to our premium subscribers, we basically outlined the possibility of this type of day. Really what you're seeing is a small up day, up 75 points or so after a big move to the downside yesterday. And that's generally, again, a pause-ish day, light volume in this market. By the way, folks, the volume today is extremely light. We've done less than half of yesterday's volume in total today. That's very impressive. So again, just noting the volume today, no volume in this market. It's almost like all the sellers came out yesterday, now everyone went into hibernation. And that's okay, because what that's doing is giving you a consolidation day, a little bit of a bounce day that could be setting us up for something tomorrow. Now, is it going to be a move higher or a move lower? That's a great question. And that, again, we'll be answering in the Research Center tonight to our premium subscribers, along with hot charts, nailed to hot charts. By the way, the last hot charts we posted was DTG. Yesterday, it was posted late last week at $23 resistance, dropped to 19 and change yesterday on a huge fall. Nailed that one out of the park. I caught that one myself on the short side for a beautiful short scalp. Beautiful call on dollar thrifty DTG to the short side in the hot charts and alerts. These are all part of the Research Center. You get the Research Center, you get everything included. So I do suggest signing up, folks. Just going back to the spiders, what you're going to look for here, 20 moving averages, the spiders on the 10-minute creeps down. That will be support. Nice little pullback in the markets right now starting, and we'll see again. You can see this blue trend line is working as very good resistance, and we'll continue to follow that over the course of time. Have a wonderful day, folks. Come join the Research Center. We hope to have you aboard real soon. Again, $49.99 per month, included everything under that Research Center, all combined. Take care.